days. First trend I would say is the maturation of entrepreneurship. So if you think about the whole sort of dot-com era, which Brazil also experienced, that was 10 years ago. So the sophistication of entrepreneurship and the sophistication of the entrepreneurs, their ideas and the portfolio companies is completely changing. So when I started in Brazil 8 years ago, the typical company that would knock on our door was a bunch of professors and grad students who typically didn't know very much about business, didn't have full teams, just had basically an abstract idea. And now, fast forward to 2010, 10 years later, we're seeing companies show up with full teams, with great PowerPoint presentations, with really sophisticated ideas. And another thing that's interesting is, whereas before they would focus exclusively on the internal market, now we're seeing Brazilian companies launch with an eye towards the external market. So 3 quick examples. There's a company called BT Buckets, which is backed by a company called Predicta. And what they do is they have a behavioral targeting solution for the long tail that it's absolutely, I was going to say bombando, but I'll say, exploding here in all over the world, and actually even with companies here in Silicon Valley. And Google can't stop singing their praises. So that's one company that's really, changing the structure, typical structure of Brazilian entrepreneurship. Another company just 2 weeks ago launched called Desk Metrics, which is sort of like Google Analytics for the desktop. And again, sites in English. You wouldn't even know it was a Brazilian company looking at it. And finally, another company, which is one of our portfolio companies, a company called Samba Tech, which is a online video platform. And again, they're also targeting the exterior market. A few other trends. So the technology dispersion model. Back in the old days, in the dot-com era, what would typically happen would be that you would focus on the US market for years 1 to 3, Europe in year 3 or 4, Asia in year 4 or 5, and maybe year 6 or 7 you finally get around to Brazil and Latin America. That's completely changed. As you know, with Web 2.0 and its iterations, now everything is really instant. And so there's no longer that time lag. So things are happening much quickly. And sort of on a related note, one of the biggest themes right now is the rise of the social web. Sort of leveraging the social graph via platforms like Twitter and Orchid and Facebook to do all kinds of, sort of disrupt traditional businesses. So, for example, you would say that Zynga and Playdom successfully leveraged the social graph in the gaming sector. So I think that the rise of social is actually going to be very good for Brazil in terms of Brazilians culturally are very social. And if you look at the statistics, Brazilians are the largest users of Orchid. Outside the US, they're the largest users of Twitter. They're huge consumers of YouTube, huge consumers of Facebook now is growing like that. So I think that the fact that Brazilians are so social, it's going to increase their importance in terms of startup companies and other companies that are trying to leverage the social. So that's good for Brazil. A couple more quick trends. Reverse migration. So for the last 18 months, I've been getting probably about anywhere from 4 to a dozen resumes a week from Brazilians who are graduates of Stanford, MIT, Harvard, Columbia, what have you, who've got MBAs, JDs, all kinds of PhDs, and they're all looking to come back. So I think that's going to bring a lot of talent back to the country. Also, a lot of them are starting internet companies, having experienced, good companies here in the US and in Europe and other places. So I think that's another important trend. And finally, 2 other quick trends. Exit environment is historically one of the things that really drives venture capital. So if you think about the dot-com crash, it wasn't the fact that people stopped having good ideas. What changed really was the exit environment. And by exit environment, I mean typically IPOs, M&A, PE firms which can act as financial buyers, and finally these new exchanges for shares in private companies. So although there isn't much of an exchange for shares in private companies, that might be a good idea for one of you to do in Latin America. But the Brazilian markets are absolutely booming, and that's due to the growth of the Novo Mercado, or new market, which is a market within the market, which has completely changed the exit environment in Brazil. And then in terms of the M&A environment, just to give you an idea of how sort of crazy it is, within the last 3 months, 4 of our portfolio companies have received unsolicited acquisition offers. So for any of you who have M&A experience, 99% of the time the deals fall through. But still, that just shows sort of the influx of companies and sort of the euphoria towards the Brazilian market. And finally, every day you open Brazil's equivalent to the Wall Street Journal, which is Valor Econômico, you see more announcements of 5 new private equity funds launching. So these PE funds are going to have to invest somewhere. And there's a lot of companies for them to invest in, but still, the fact that they're there and they've got all this capital to deploy means that they're probably going to get into the startup companies. And finally, and again, my apologies for the rush, but finally, a last trend is the following. Do any of you know what Graham dot investing is? Or Warren Buffett's strategy, most epitomized by Warren Buffett. So typically, Graham dot investor will look to buy a dollar's worth of assets for 10 cents, hoping that they can hold on to it, and that eventually its market price will reach its equilibrium with its intrinsic value. So if you think about what's going on with this Graham dot philosophy, it's always seemed a little weak to me in the sense that there needs to be some kind of trigger for this value to be realized. So you can buy a dollar's worth of assets for 10 cents, but if it takes 20 years for that asset to realize its market, for its intrinsic value to reach its market price, it's not going to work, right? So the second phase of sophistication in terms of Graham dot investing is to look for an embedded catalyst. So, okay, I know that within X number of years, some event is going to happen in the market which triggers this valuation, okay? So I'd just like to leave you with 4 catalysts which I think are important for the Brazilian market. The first, which you well know, I'm sure, is the Olympics. So let's say $60 billion is going to be spent on that. That's one catalyst. Another catalyst, the World Cup, $50 billion is going to be spent on that. Another catalyst, accessing Brazil's pre-salt oil deposits. You know how much they're forecasting that they're going to be spending on that?
400 billion.
How much?
400 billion.
Exactly. Between 200 and 400 billion. And what was the size of the U.S. stimulus package?
77.
Yeah, and Brazil's half the size of the U.S. So it just goes to show you the impact that could potentially have. And then finally, on top of that, a final trend that I'll leave you with is the interest rates in Brazil. So interest rates have fallen dramatically. And what does that mean for all the pension funds and investors who are historically getting high, 40% interest rate? They need to deploy that money somewhere, right? So where's that money going to go? It's going to go into the stock market. So between those 4 catalysts, all of which will occur within the next, 6 to 8 years, the Brazilian market should do, really well. So anyway, thank you, and hopefully I'll look forward to your questions after each stuff.